Every week we take a look at a risk event for the week ahead, and it's no different here as we look ahead to the week starting Monday the 19th of June. It's the Bank of England's turn to look at interest rates. This comes on Thursday next week, Thursday 22nd of June. Just as the Fed did a hawkish pause, Bloomberg suggests the Bank of England will do a dovish hike. That is to emphasise their drive to keep driving down inflation, but at the same time keeping consumers on side. It's suggested that the Bank of England does go a quarter point, and then possibly it will go into some sort of pause mode. The risk event around this is the fact that it could either be very much more hawkish or perhaps more dovish than might otherwise be anticipated in the market. Let's take a look at a trade around this. This is sterling against the Japanese yen. We know the yen is weak. We know the yen's position has been exacerbated by the Bank of Japan's dovish policy, which continues. This is a chart which seems to have little or no end in sight. This is the long-term chart for the sterling against the Japanese yen. We're currently trading at 180.45. If you go back into history, you can see the last time we were at these levels was around, December 2015. And as I say, there seems to be no let-up. The one thing I would caution is that if you are long on this going into the Bank of England next week, if you're long sterling against the Japanese yen, just continue to keep your stop loss up underneath, very close underneath, to lock in those profits. At the moment, as we're standing here just before the equity markets open on Friday, to give you some sort of context, so we're 6 days away from the Bank of England's decision. We are absolutely at the top of the candle at 180.50. That means there are no sellers in this market at the moment for sterling against the Japanese yen. So the risk event next week, the Bank of England interest rate decision, high noon on Thursday, the 22nd of June.